The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, everyone. This is Larry Pesavento for TFNN, 877-927-6648 if you have any questions. And the first chart, most of the early morning show here, or early afternoon show here, is going to be about money. And what I thought I would do would be to start out with the E-mini S&P, because we're completing a Gartley pattern up here at this 786 retracement. And the risk here is really not more than about 4 points, I would guess. So keep an eye on that as we go through the show. Now, the first chart that I wanted to start with, and we will continue doing this until it rectifies itself. Either I'll be wrong or right, which is always the case. I'm always 50%, either right or wrong. I never know which one it's going to be. But the one that we're going to be talking about is Apple, because we have this same pattern completing in a whole lot of different things. And if you'll notice that Apple chart, where the top was made, I've made a little diagram, a little ellipse up there to show you that it's left an island reversal up at that level where it stayed for 5 days, for almost a whole week. Actually, it was part of 1 week and then part of another, but it actually gapped down below that when it went below the 690 level. And that left an island reversal, which is an incredibly bearish pattern. And if you'll take a look at how bullish it can be on the opposite side, if you'll look at the low that we made in July, at the end of July, you'll see the island reversal that occurred, at that time. And it was the same thing. I'm going to put this one into Tiger TV so that you can see the same pattern on the bullish side. And that's what we're looking at now. The expectation here is that we could get a rally all the way up to 686 in the Apple. We did touch we went a little bit below that 660 level, which was 656 was the low of the previous last September. If we go below that, everybody that had bought this stock in the last month and a half is going to be underwater in it. So we really want to watch that 656 level. I think it will be important, on a longer term basis, if this island reversal is in fact going to come to pass. Now, on Monday's show, I talked a little bit about Peggy Hitchcock Mellon and the fact that she had given me this $100 bill from way back in 1928, and I'm going to post it into the room so you can take a look at it. And you'll see that on the right-hand side, it's signed by Andrew Mellon, Secretary of the Treasurer. It was a gold note, and it was a $100 value, of course. 1928 was the year she was born. And if you'll notice the G that's on this is how they signify the Federal Reserve systems, back in those days. By each one had a letter. This one was from Chicago. I believe the letter for San Francisco is S, but I'm not sure. What I want to talk a little bit now, and this is interesting to me, so I hope it's interesting to you, and that is just about about paper money itself. We only have denominations of 1, 5, 10s, and 20s, 50s, and 100s. That's what we have. But years ago, we had bills that went all the way out, to $10,000, and there's only been a few $100,000 bills. I never try to carry more than 2 or 3 of these at any one time because they're quite nice, and I don't want to put them in my billfold or my money clip. It makes it a little cluttered. But the $100,000 bill, there was only some of them promoted or actually produced. Woodrow Wilson was on the picture of those. They were actually notes that actually paid money, interest rate on those. They were gold certificates backed by gold, and so this is what this is what we had with the $1,000 bill. Now we also have a $10,000 bill, and I will put that up so you can take a look at that one too. This one was one that was. The person that was on this was Salmon P. Chase of the Chase Manhattan Bank, And this also was out of circulation. Now, the reason why these high bill, actually between $500 and $1,000, $10,000, $5,000, and $10,000 bills were very, very. You never saw those, but you used to see $500 and $1,000 bills all the time. When I was trading on the floor of the exchange in Chicago, we had a friend at the Federal Reserve Bank of Chicago, and she would, whenever she got a $500 or $1,000 bill, we would go over and exchange it for regular money, and keep the $500 and $1,000 bills. Both of my kids have a $500 bill and a $1,000 bills in their safety deposit box that I paid face value for, and a $500 bill goes for around $2,900 now. And the $1,000 bill goes to about $3,900, if they are in good condition. Now, there's all different kinds of dates on these things, but the one that's the most frequently seen, if you ever see any of these, is the $500 bill that has the picture of William McKinley on it. The reason why these were taken out of circulation was because of the organized crime. They were getting into drugs and all kinds of things, and so they were trying to move a lot of money. And so if they had larger denominations of bills, it's much easier to do that. And that's the primary reason. Now, the euro has a 500 euro note or bill that I've seen actually in London when I was there. So they do have large denominations in the euro, but we only go to $100 bill. Now, there's a I want to put the other one up, which is the $1,000 bill, which is really quite interesting. And this is a picture of Grover Cleveland. He was, of course, one of our presidents. And that's the only thing the only non-president that we have on a bill, of course, is Benjamin Franklin, and he's on the C note. So that's one. But the $1,000 bill has Cleveland. McKinley is 500. And so these are the ones we look at. Now, what I would like to do is to show you the most expensive bill ever sold. It was just sold a few years ago, and it was sold it was a $1,000 bill from the 1874 area, I believe, and Hamilton was a president. And but this bill that I posted, this $1,000 bill that was done in I believe 1874, was sold to a Texas collector for $2.4 million for a $1,000 bill. I don't know if you folks have ever seen any of the old railroad bills that we used to have that have the $5, $10, $20, $50, and $100 denominations, and they're in color. And believe me, these were back in the 20s and 30s, and actually the 1910 era too. And those bills are worth an absolute fortune because they're such wonderful art objects. But this is something that I've had an interest in through the years, but I don't collect them anymore. I try to spend them as fast as I get them. Okay, we already talked about Apple. We talked a little bit, about the S&P up at this level right here, where we are up at that 47 level. It's completing a Gartley pattern and an ABCD. Now, one of the things that I wanted to talk about was the why pattern. What happens when patterns fail? And I didn't know this pattern was going to fail, but what I did is I put it in there just in case it did fail. And this is the Australian dollar versus the U.S. dollar. And it shows that, there's all kinds of patterns that are completing at that 102.64 level. And what I did was I made a notation that if this pattern fails, to look out below, because it'll go down to the next support level at the 102 or lower. And so this is what I was looking at. And I actually bought this at this level, 102.64. In the next 2.5 hours, I ended up losing 30 pips on the trade. But I'm trying to show you that these patterns are, and we all know this, but we keep forgetting, is that these patterns have, probabilities of winning. That's all they are. They're just probabilities, nothing more than that. And as you can see from this Australian dollar, U.S. dollar, that the pattern did fail, and it went, a good $1,000, below, almost $1,000 from where I got in. But I only took a $300 risk on this, and so it wasn't too bad. So it did fail, and so this is this is why you have to use stops when you're trading this. And let me explain something to you about stops. Stops are used for your protection, and your protection only, because your biggest enemy in these markets are yourself. It's not anybody else. It's not Ben Bernanke. It's not Larry Pesavento, Steve Rhodes, Basil Chapman, Tom O'Brien, anybody like that. Your biggest enemy is yourself, because when you're looking at the monitor, you're looking at a mirror. When I first started to trade on the floor of the exchange in February of 1982, I traded through Lynn Waldock, and Barry Lind invited me into his office, and I'd done a lot of business with Lynn Waldock when I was at Drexel, and he said, how can I, make your stay here in Chicago, fun and profitable, because I know you're only going to be here a few years. And I said, well, if you will just liquidate my positions on any position that I have a loss in for the third day. On the end of the third day, if I still have a loss in a position, just take me out. Don't even ask me. And that rule kept me alive all the time I was in Chicago, because even if I was wrong, they would take me out of the position, and then I have to reevaluate. And the reason why you do that is because you have an opinion, about doing something. So Barry put it on in the equity runs that if I had a loss at the end of the third day, the broker actually, it happened 6 or 7 times, but the broker, maybe a few more than that, but the broker, the floor runner would come up to me and say, we're taking you out of the T-bills, or it was mainly T-bills and currency what I was trading, because we didn't have S&P trading until April of 1982. So they would just take me out, and it was really something that really helped me along the way. It's called the 3-day rule. If you don't have a profit in something after 3 days, you're probably wrong. And that's the thing that you have to realize, that this is what you're doing. Now, the same thing is happening today in the Canadian dollar. We shorted the Canadian dollar up here at the 98.80 level, and it's actually working in our favor, about 20 pips so far. I mean, it's not much, but at least started in the right direction. Whereas with the Australian dollar, it didn't start in the right direction. It just literally started going against me immediately, and I had no choice but to take the loss and to get out. Remember, your first loss is your easiest. And you must use stops. They're there for your protection. One of my mentors, who I've had on the show before, John Hill from Futures Truth, all 3 of his kids are in the business. 2 of them trade for hedge funds. 1 trades for himself. And the rule that John always said was, the stop rule is you're always going to get stopped out on the lower high tick. Just figure that out. So just put the order in and take the pain away. And that's what it does. It reduces the pain. It allows you to go on to the next trade, and that's about it. But stops, you have to learn to love them, because they're there for your protection, and that's why you want to use them. If you don't use stops, you have told the market that I know more than you do. I know where you're going. And folks, let me tell you something for sure, 100%, we don't know. We never know where the market's going, and, that's it. And we never know how much we're going to make on a trade. So the only thing we can control is our stop placement, and that's what we're really trying to accomplish when we're doing this. Now, I wanted to make a little comment about the election, and I'll do that right after. But believe me, it's going to be really brief. 877-927-6648.
TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to 1 lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com, where you'll find all the details. October 29th, 30th, and 31st, we'll choose 1 lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to give you my 2 cents worth about the elections that are coming up, okay? We will elect a president. Okay, that's the end of my rhetoric on the election. Okay, and we're going to talk a little bit about crude oil because we've broken down below that 89, 90 level several times now, and it looks like we're setting up to make the 86, 90 level, which would make a little three-drive pattern, on the daily, and it would also be a 61% retracement coming off of the June lows. So and believe me, if we don't hold the 86 level, these things are really going to be very, very nasty on the downside. That would set up a price of about 55 in crude oil if it does break down. We've had a lot of bullish news on crude oil over the past several months with the potential of nuclear war in the Middle East and cutting off of supplies, and none of that really mattered. So my assumption is that we're in a downtrend here, but we're very oversold in crude oil now. So we should be able to see some kind of a bounce. Where it's going to come from, I'm not sure. Now this next one is one of the products that we use all the time, and that's gasoline for our cars. And you can see that we've had a pretty big correction, and then we had a rally back, and the market is now at the 61% retracement already in the gasoline contract. So at that $2.76 per gallon level, it had reached the 61% retracement coming off of the June lows. So the market has been under a great deal of pressure. It's ready to have a counter trend bounce here, and then we'll see if it does have any more potential to the upside. But right now it's just very oversold, and ready to come down. The one thing that I think that you should get out of this gasoline chart, if you take a look at it in Tiger TV, if you look at the butterfly top that we had in the gasoline in March, and you'll see that it looks very, very similar to the one that we've just had in Apple Computer, because all of these things look alike eventually, because they look like that all the time, because it's nothing more than buying and selling and fear and greed. So all the charts have to look alike. So it had the same pattern at the top that we have in Apple Computer and a whole bunch of other things. So this is why you want to keep an eye on these patterns when they do form, because even though they don't work all the time, they work far better than if you just flipped a coin. And actually, you can make money, by flipping a coin, because if you can control your risk and let your profits run, then you can do it. But the problem is, how do you let your profits run? That's the $64 question. And so you have to be able to, mix and match and make sure that you're able to pick out a pattern that actually looks, relatively easy to trade. And frankly, that Canadian dollar trade that I posted in there, that's the kind of trade that you want to be looking at. I will put this back into Tiger TV, and you'll see that it's formed a bearish-Gartley pattern. You have several ABCD patterns that are there, and it came in at 98.82, and that was the number was looking at was 98.80. So that's the that's the place where you want to enter. There were no danger signals at that time. There were no wide-ranging bars or gaps. The report that came out on the unemployment report, didn't affect the market too much. So this is the ideal situation, that you have. It doesn't mean that it's going to work, but that by putting a stop in of 30 pips, you're risking $300, and your profit objective would be at least 3 times that. So you'd be looking for, a little more than 100 pips to the downside, which would take you down to that 97.80 level, if it in fact does that. We'll follow this one also on the show tomorrow when we do the commodity show, and believe me, there's a lot of things happening in the commodity market, especially in the grain complex, because we have corn going up and beans going down, and that doesn't stay that way very long after a drought situation. So we're going to be watching that extremely closely tomorrow. The divergence that we've had in the transportations versus the stock exchange, as far as the Dow Jones, all that is still in play. I mean, we're having a rally today in the transportations, but frankly, it's doing very little compared to what it should be doing. There's a huge divergence there that I think means a very, very ominous signs for the economy. Okay, we're going to take a little break here. 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, folks, we're coming back to TFNN. I posted in the Tiger TV the S&P for the 5-minute chart for today because I believe we're making a very important ABCD 3-drive pattern up here in this 1447.75 to 1448.75 in my opinion. So we'll just see how this works. We've got a caller from North Carolina. Are you there, Mary?
Yes.
How are you?
Well, I'm all right.
That's good to hear.
How are you?
I'm good, thank you. What can I do for you?
Well, this has to do with the S&P. A friend of mine who follows the market and charts and things said to me yesterday that the S&P is very close to forming a death cross rather than the golden cross. Are you familiar with those two phenomenon, aren't you?
I'm familiar with the golden cross because
the death cross is simply when the S&P 500 50-day moving average crosses over the 200.
Okay.
Crosses above it. But this would involve the 50-month, not the 50-day moving average. So it's a much longer term, and of course this is considered very bearish. And I just wondered if you had any charts that would show this to be true, and at what point on the S&P would the cross actually occur?
Well, I'll tell you what, Mary, the person to answer that question would be Basil, because he really understands.
Really?
Yes, he understands the moving averages far better than I do. I don't even know how to put a moving average into my Ensign charting platform because I just don't use them. And another thing, Mary, is I don't look at monthly charts. I'm basically at my age, a 5-minute chart is long term for me. Not quite that bad, but I'm basically a trader. I'm not interested in the monthlies. But the one chart that I posted in there that I think is the most important chart that I've seen in a long time is the divergence between the Dow Jones Transportations and what's happening now. I don't know why the market is still hanging up in this area, and it's natural that it's here. There's a cycle there that I have not been able to spot, but that divergence in the transportations and also in the utilities is just absolutely it's historic. It's really historic. So that's what I would watch. Yes.
All right, I'll do that. Thank you so much for
You bet, Mary Ann. It's good talking to you.
Good talking to you, too.
You live in a beautiful part of the country, let me tell you. I was there a few years ago visiting my mentor, John Hill, in Hendersonville, which is not too far from you. So it's a beautiful area.
Yes, it's the golfer's paradise.
Yes.
Yes.
Okay, thanks for calling in.
I'm very happy here. Thank you. Bye-bye.
You bet. Bye-bye. Yes, it's a golfer's paradise. Most of you that know me know that I'm a 2 handicap in golf. My only 2 handicaps are driving and putting, and I also have a lot of trouble getting my cart up on that hole with the windmill. That is a real tough one for me. I can handle the clown one pretty good, but the windmill hole is really tough on me. So anyway, we're looking at this pattern in E-mini S&P. And that's something that we want to keep in mind. Now, I wanted to go back to the when we were talking about the bills, the $500 and the $1,000 bills. This is the reason why I got into this business of speculation, because of the bills that were that had silver certificates, the bills of 1 and 5 and 10 denominations were silver certificates, and if you had more value in the silver than you had in the paper, these silver certificates would disappear from the public, and that's called Gresham's law. Gresham said that bad money will drive out good money, and if something is more valuable than what you're trying to spend it at, it will become more valuable. And this is what happened with the $500 bills, and it's happened with the $1,000 bills and all the others, because once that they're not there anymore, then you're able to see that that's just, I think that's Mr. Bernanke calling in, but I'm going to have to put him on hold here for a minute. The thing that you want to keep an eye on when you see something happening, what I do is I buy any rolls that come out of the coins that come out because I like the pictures that are on them, and they're done very beautiful by the pictures and everything that's there. So I do keep a roll of those for my grandson every time something comes out, and that's a good way of collecting some things. And some of these have been quite valuable over the years, which is really good. I'm going to get off the subject. 2 weeks ago, when I got back from my holiday, I went into the bank, and sure enough, I found the lady was there, and she'd just gotten 2 rolls uncirculated of Eisenhower dollars from 1972. And she had only paid the person, face value, because that's all she could. And I asked her, I said, "Can I buy those? Can I get those instead of 220s?" And so I got 40 uncirculated Eisenhower dollars, which really made me quite happy. They weren't quite a bit more than the face value. They're about 2.5 times face, but the fact that I was still able to do that was really quite a lot of fun. So. Okay, the next thing we want to go to is our gold and our silver, because we are really watching these with the, I really think, I know that it's difficult to hold back my enthusiasm in some of these things, but the gold is just not backing off, folks. It's just holding in here incredibly well, and it's gone up, and it's taken out last week's high, and then it could not even correct at all. It's something that the corrections that we're getting are like $15 and $17 after we hit that low down at that ABCD at that 17.38 per ounce, and right now we're just going sideways. And if we get a close above 1,800 in gold, that's going to be a major breakout in my opinion, because you're going to be, breaking out above the 786. That's exactly what happened when the crude oil broke below $95 a barrel. It breaks it out, and then it makes it being pulled up to the next harmonic number that we look at, which after 786 is of course the 1.27, and that's what we're looking for, in the gold to see if it's going to. Now silver is still hanging in there. The open interest in these have not increased as much as I had liked, but here again, you've got a situation where the gold and silver are holding at incredibly high levels, and that's exactly what we want to do. We should be selling off here a little bit because they've gone straight up for ever since August the 6th. So we've been up for over going on almost 2 months now, 10 weeks, and yet they're backing off just very, very little. And as you can see, the silver level has taken out last week's high when it hit the 35.50 per ounce level. Then we backed off just a tiny little bit, 80 cents or so, but we're still within striking distance of going above those highs. And if we just stay here for 3 or 4 days like we've done 3 or 4 times before in both gold and silver, this means that there's no selling coming in, and you're getting ready to have another run to the upside. So I still think that we have a chance of silver and gold both breaking out, but the key number is we need to have gold close above $1,800 per ounce. And when you're at $1,800 per ounce, folks, you're only $132 an ounce from the old high at $1,932. And if the gold takes out $1,932, that sets up an ABCD pattern that will take gold to $2,200 on the long-term, weekly charts, which is, that's a substantial, substantial amount. I'll see if I can get that weekly chart up here for you in gold, just to show you what that pattern would look like on a weekly basis, because it would be a really monster pattern. And yes, I can do it. If you give me 1 second here, I'm trying to walk and chew gum at the same time, which is not easy to do. And the fact it's going to measure, that's exactly where it's going to measure to, at least that high. Holy cow, it could even be higher. Yeah, it will be higher. It'll be way above $2,200 an ounce on the longer term ABCD. It would come in at about just about almost $2,400 and an ounce on that if it does get above the 1932 level. Now it's not going to make it overnight, but that would be the longer term price objective. Now if corn can go from to $8.50 a bushel, we can certainly get gold to get above 1932. It could easily go another 20% or so to get up to the that $2,400 per barrel level per ounce level. So this is the key level though is 1,800. We really need to clear that. The ideal situation is if you're bullish gold, you'd really love to see a 2 or 3 week correction here. Coming down, maybe down to a 61% retracement, down to around the 1690 level or 1632, somewhere in that ballpark, and then be able to try to buy it. But I'm watching for all ABCD corrections in gold, looking at the 30-minute chart. We just had one just a week or so ago at that 1750 level, exactly 1738. And so we're really hanging in there pretty good as far as moving up from that level, and we've already taken out the high of that previous high at 1792, which is a good sign. And we backed off just a little bit, but still not very much. But I really think we've got a chance for gold and silver to have a pretty good move to the upside. The real question is how much of a correction are we going to have? Now there's going to be we're still a month away from the election, but the day after the election is going to be pretty wild. It'll start, of course, in Asia, and then in Europe, and then bring on to the United States. But it's going to be a very wild, wild trading range and everything. The only thing that I caution everybody about is just be real careful about what you read about on the internet. Okay, a lot of the stuff that's on the internet is caca, and that is not good stuff. I mean, there's a lot of things out there that are just not as they say on the internet, and believe me, you just have to be really careful. So, make up your mind, and like Mayor Daley said from Chicago, vote early and vote often. So that's the only thing I can mention about the election that I know about, frankly, and that's very little because of the fact that these presidential elections are so, oh gosh, they're depressing. In fact, I won't even watch the debate tonight. I'll wait and see what people think about the debate. But as far as listening to it, I just don't. It's not something that I have a great deal of interest in. I probably should have, but I don't. I just don't trust the way people say things, and they say anything that they can, about this, and I don't particularly like to do that. If you have any questions, we have 877-927-6648, and we want to talk about Treasury bonds today because they got a lot of press because of Bill Gross came on today on CNBC and also Bloomberg, and he talked about Treasury bonds, and he thought that this was going to be a really bad market. I forget exactly what he was trying to say. But frankly, remember that Bill Gross's business is Treasury bonds and Treasury notes. He has, I think, I forget what it is. It's got to be close to $1 trillion or more, tied up in these markets. And so when he has self-serving, ideas here. And this is what we're looking at. We the Treasury bonds are an absolute great trading vehicle if you like to day trade and things like that. We just had a beautiful ABCD form today up at the the 150.07 level, and we've already dropped almost $1,000 from that level. That was one of the trades that I was looking at earlier this morning. And we've come down to the 786, and we've made 3 higher bottoms. So we're about ready to have a small rally, I would think, in these bonds, if in fact we do get a rally. But for some reason I have to fix my telephone. I'm sorry, folks. And I will get back to them later. It's Bernanke again, calling again. He must want some advice. Tell him to get a day job where he has to sign the front of the check instead of the back of the check. Okay, the next market we want to cover is the VIX index, because I think this is one that is still going to be a really good one on a longer-term basis. And, we've had a pretty nice run up, and then we've been backing off ever since we've had this little rally in the stock market. We're still holding against all these cycles. They still look like they have a great deal of chance to, hold up. And my feeling is the chart itself still looks like it's okay. And as long as we can stay above 1,300 in that VIX, it's going to be interesting. But believe me, with the news of the election, which will be some kind of a catalyst, and I don't think it will mean much after 2 or 3 days after the election, but the day after the election is going to be very, very, very tough. So that's what we're talking about now. I'll be back in a few minutes, and we'll wrap up the show. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we have our friend John from Philadelphia on the line. Are you there, John?
Hey, Larry. Good morning to you.
Good morning to you. What can we do for you?
Larry, I wanted to ask you a follow-up question on the Canadian dollar. You posted the short-term chart with a bearish Gartley pattern that you saw to short here today.
Yes.
So I see on the short-term what you're dealing with. Wanted to ask if you could pull up the weekly chart. I frankly see a completed ABC down at a Fib 786. Down at that September low of about 96.30. I'm actually speculating on the dollar Canadian on the long side from down near lower that level and see, regardless of whether any short-term pullback or not occurs, a bigger rally in the dollar Canadian occurring. I'm wondering if you see something similar or if I'm all wet on that in your opinion.
Well, John, one thing I know about this market for sure is you're never all wet. You're as good as any technician that I've come across, but you're absolutely correct. We did make a bottom 4 weeks ago, and all I'm doing, John, is I'm just trading to make a living. I'm looking at 30-minute charts, and I'm just trading the 30-minute chart. I will not look at a daily or a weekly when I'm trading the 30-minute chart because it'll just confuse me. But we did make a a big bottom in the Canadian. As a matter of fact, I think you came on the air as a guest that time when that was occurring, and that's in fact exactly what it did. It hit the exact 786 within about 6 pips at 96.50, and it's rallied over $2,000 in 4 weeks.
Let me ask you this: let us assume that the dollar Canadian did make a high at 98.80 here this morning. That holds for a bit and pulls back. If we pull back into the 618, if that were to unfold, would you be a buyer down there looking on something bigger term back to the upside?
Well, I would be a buyer because of what it's doing on the hourly chart, but I wouldn't be looking at the weekly. I'd be looking at the daily. As a matter of fact, you know what I mean? If I look at a weekly chart, my risk parameters are out of my comfort zone. You know, when you get to be 72 years old, you don't like to risk as much as you do when you're young, like you are. So I only like to risk not more than 30 to 50 pips. And if you're doing a weekly chart, you can't do that. But
sure,
if we'll start following the Canadian, because I think this pattern, and as a matter of fact, I said I was going to follow the Canadian, just like I follow Apple and stuff, just to show you how some of these patterns work or how they don't work. But that's what I would wait for. But at 97, if I sold it at 98.80 and it got to 97, I would be happier than the pig sitting on the porch. Yes, I'd be very happy.
Right, you'd be happy.
So,
let me mention just one thing for you and your listeners. You had documented very well. You know what? We're running out of time.
Yep. Look, I think we have to pay more commercial time, or they weren't going to let you speak.
Larry.
Thanks for calling in, John.
Thank you.
May God bless everybody. Have a wonderful day.